Bank reconciliation. Dear students, today we will learn about bank reconciliation. The bank passbook, which is the banker's record of the transactions between the bank and the customer, should be checked at frequent intervals with the items in the bank columns of cash book or the bank account in the ledger, with a view to see that the balance as shown by the passbook at any particular date agrees with the balance as shown by our books. All the monies paid in by the customer in the bank on current account, as also the sums paid there out by the banker, are entered up in a passbook, which is kept and written up by the banker and sent to the depositor for verification as and when the latter demands it. Since the bank passbook records the amounts paid into the bank and the amounts withdrawn therefrom, the balance on any date as indicated by this book must be the same as the balance shown by the bank columns of the cash book of the current depositor on the same date. But sometimes, however, in practice, that the bank passbook balances disagree with the bank balances as shown by the cash book on any one particular date. The reasons for disagreement of bank balance and the balance as shown in the passbook are listed below. 1. Checks may have been drawn in payment of accounts due and credited in the bank column of the cash book, but the same may not appear in the passbook owing to their not having been presented to the bank for payment up to the date on which the two balances are compared. Up-country checks may have been paid into the bank and debited in the bank column of the cash book, but the same may not have been credited in the passbook on account of the fact that they may not have been cleared. Credit for interest on current account may have been given in the passbook, but no corresponding entry may have been made in the cash book. Debit might have been given in the passbook in respect of bank charges, commission or interest on overdraft, but the same may not have been entered in the cash book. Dishonored bills or checks may have been debited in the passbook, but the same may not have been given effect into our books. A discrepancy between the two balances may also arise due to an error or omission of an entry either on part of the customer or by the banker. A reconciliation statement is therefore prepared at periodical intervals with a view to indicate the items which cause such a disagreement between the balances as per the bank columns of the cash book and the bank passbook on any given date. It is prepared after all items in the passbook are ticked off with the entries in the cash book bank columns. A list is then made of such items as are found not ticked either in the cash book or in the passbook. The unticked items in the cash book will represent checks paid into but not credited in the passbook or checks issued but not presented for payment. The unticked items in the passbook will relate to the credits given, if any, for interest on current account or the deposit in respect of bank charges, commission or dishonored checks or bills. If the balances as shown by the bank passbook is used as a starting point, the checks not presented for payment should be deducted therefrom inasmuch as they would reduce the bank balance, and the checks not cleared and credited should be added thereto as they would serve to increase the bank balance. When this is done, the bank passbook balance will be brought on a line with the record as appearing in the bank columns of the cash book. In the case of a bank overdraft, the checks issued but not cashed should be added thereto as they would increase the overdraft, and those paid in but not cleared should be deducted therefrom as they would decrease such overdraft. Where the bank balance as per cash book is taken as the starting point, the process of adjustments would be just the reverse of the above. It needs to be pointed out that subject to any error or omission of any entries in the cash book in respect of bank interest or bank charges, the bank balance as per the cash book bank columns always indicates the correct position, and it is in order to ensure this that a bank reconciliation statement is prepared. The following illustrations will serve to explain how bank reconciliation statements are prepared. From the following particulars, prepare a bank reconciliation statement as at 31st March 2021. Balance as per passbook is 6,245. Checks issued but not presented were R. Rit Company Rs 459, S. Sorabji and Sons Rs 596 and Banaras Das Bros 957. Checks deposited but not cleared until after the close of the year were Johnson and Company 506 and Hassam Brothers 913. Our bankers had wrongly debited our account with 225, which error was rectified by them at our instance on April 4th. Let us prepare bank reconciliation statement as at 31st March 2021. Balance as per passbook is Rs 6,245. We have to show this in the beginning. Balance as per passbook 6,245. The first difference is checks issued but not presented were R. Rit Company 459, S. Sorabji and Sons 596 and Banaras Brothers 957. These checks were issued but they were not presented by the customers. So we have to deduct this amount from the bank passbook. Next, add checks deposited but not cleared. Checks deposited but not cleared. We have deposited checks given by Johnson and Hossam Brothers for 1,000 totaling to 1,419. We have to add this amount to the passbook balance and then add an amount wrongly debited by bank, 225 rupees. Totaling comes to balance as per cash book 5,877. In the next lecture, we will discuss about trial balance.